Might look for some questions. There's just one at the back. Could just get a microphone up the back there.
Hello. Hello, Rob Nelson from Real Dairy. More to the dairy guys, if I can. Roughly in the year 2000, Fonterra was produced, or New Zealand was producing 10 billion litres of milk, and Australia was producing 10 billion litres of milk. Fast forward to today, and that number in New Zealand is around about 22 billion litres of milk, and Australia is about 8.5 billion litres of milk. On the back of 4 relatively good seasons, the highest milk prices that you guys have ever had to pay, and a government imposing regulation whereby you have to guarantee on the 1st of June a 12-month minimum price to the dairy farmers. How is it that the dairy farmer hasn't responded to that, and the leaders have continued to ebb away?
Have a crack, please.
Yeah, I agree with your numbers. In Australia, it's only in the last 2 or 3 years that dairy prices have increased. Farmers have struggled. I know what our dairy farms' cost of production are, so I can say that our farmers that are supplying us are doing very well, because our farms are doing very well. So when a farmer says to me, oh, you've got to increase the price because my cost of inputs have gone up, I say to them, well, if you can't make money now, you never will. You should get out. And what we're seeing is the farmers who are still in are making very good money, and many of them are increasing herd size, increasing scale, buying up other farms. And I think I've been in this industry 15 years, and it's the first time I've seen younger guys who are now coming back to the farm. So I think it's bottomed. There's been a lot of competition, especially up in the north, for land. Land prices have been crazy. They're settling back a bit now. There's been issues with water. And water's come back. I mean, I've got theories about weather going forward. After this El Nino, which will be short and sharp and quite harsh, my weather guru tells me that we're into a 15-year cooling cycle. That will be very good for dairy. So I'm very optimistic.
Yeah, I think just to build on Paul, and he's got a lot more experience in dairy than I do. You know, when I talk to farmers, they're echoing sort of 5 things that have caused the milk pool to come down. Labor was made a lot harder by COVID. We had 2 years where we didn't have the usual flow of immigration. I think that starts to stabilize over the next 12 months, and then hopefully gets better, you know, in the 2nd and the 3rd year. Land prices coming off, and I think the alternative of beef cattle. As you talk to farmers, a lot of them are going, what do I do with my chopper calves? Am I growing my dairy herd? Or is the alternative of beef very high priced? And if you go back 6-12 months ago, beef hit a huge peak. But let me tell you, when Gina Reinhardt sells her cattle stations, you got to figure it's peaked out and it's coming in the other direction. So I feel labor is going to stabilize and get better. The alternative of beef is starting to come off, which I think will be supportive of dairy. And as Paul said, the weather's getting better. The one thing that I think isn't going to get better that we got to look at, yes, there's some young folks coming back to dairy farming. There's also still a lot of youngsters who, it's a hard thing. You know, having grown up in a dairy farming community, they get up long before the crack of dawn. And unlike some other farming industries, you got to be there every day milking the cows, looking after the cows. It's a hard life. it's not necessarily, attracting all of the youth. It is attracting some, and how we invest in that as dairy processors is going to be absolutely critical. Just like Paul and his company is thinking about that, we are at Bega as well. How do you sort of, invest in automation for dairy farms? How do you help that process occur? That's going to be vital for the industry. The other thing I've seen in grapes, if you go back to wine 50 years ago, a lot of small holdings, small vineyards, right? You're going to see in 20 or 30 years, there's probably fewer, much larger dairy farms. So how do we help the farmers that want to scale get the investment capital, the capabilities, the knowledge, and the backing to be able to scale? Is that longer range contracts? Is that, part investments in automation? Is it offtake agreements? What I do know is some of the huge dairy farms that we deal with are able to afford advanced things like methane capture operations. So I think where we are in 20 or 30 years is probably fewer, much larger dairy farms. And that's probably where the industry has to go, both for sustainability, but also to react to the issue of sometimes the young folks don't want to take over what's a very hard way of life.
So it's just a follow-up question. Knowing a few young people, fast is good. Not paying them faster, Paul. I know you went to 10 days and then you've gone out to 15, but any thinking around that faster payment and whether that's helping bring the farmers on, or is that important? Or are there any other sort of tips you can see in terms of growing, that you've been able to grow your pool, your milk?
The faster payment was important to establish credibility early days. Because at the time we started, there were a couple of guys who were not paying on time, and then they eventually fell over. I think it's the longer term contracts that are more interesting. Gunther mentioned next Thursday, 2 o'clock. Well, we already have a number of farmers who are signed up for the next 2 or 3 years, who with guaranteed prices, and they've taken that to the bank. So it's look, one size doesn't fit all, but we are seeing a lot more farmers getting bigger.
Sure. Further question at the back there?
Hi, yes, I have one also for the dairy guys. Thank you very much for your presentations. Paul, you mentioned about the decimation of the industry, the dairy industry in the Netherlands. I think that it's possibly even been more than a decimation. So they have they've got government laws that have come in to say they need to reduce their herd size by 30% by 2030. So getting back to the ESG angle of this discussion, in Australia, there was reported in the Australian earlier this week that the Labor Party is planning on voting in August at its conference on adopting a policy of 50% reduction in emissions from agriculture by 2030. Not 50% net reduction, but 50% reduction. How best can the dairy industry push back against that?
Yeah, I saw that as well. I suppose the biggest thing that is pushing that are the methane out of the cows. We heard earlier about the methane reduction food. I suspect that will have a big impact. The other things that, not just that, but in terms of carbon emissions, a lot of our farmers are putting solar on their barns. It's an ongoing issue that we have to address. We just have to keep mindful of it. Yes, I get frustrated with these things. I mean, we've got what I regard environmental cowards having a real go in Australia, which is fantastic. 1% of emissions. If they're serious, get to China, India, Russia, and start your protests there. That's where I get so frustrated.
I think the other thing is I'd say for companies like Bega, I mean, obviously, you know, our colleague Brendan here talked about the launch of Bega plant-based cheese. So as a branded company, there's the critical dairy part of our portfolio, but we're very interested in things like plant-based milks, plant-based cheeses. I would say as a grazing cheese, I'm not sure yet, but it tastes awfully good in a pizza. And I've tried it with a little bit of rocket and pepperoni, and it's very flavorful and it got a bit of stretch to it. So how you look at your portfolio as a company, that's going to help balance food companies. That's important for us. And then I talked about the Bega circularity. So reaching back into the farms, you know, trying to get them all to pay for Asparagopsis is expensive for farmers. And they're going to go, do I get more for milk if I do that? Maybe not yet. But what other strategies can we use at farm level to help with this? And as I said, when you've got a scaled farm, we have some that have methane capture at farm level, but you've got to reach a certain size before you can afford that kind of automation. So the question in the next 20 years is, how does the dairy industry reinvent itself to become more sustainable? And if we can do that, we will continue to be a, you know, a consumption protein of choice. So alternative proteins, and then also dairy reinventing itself. These will be the two track strategy for success, I think.
Thank you. Might tell.
We've got one down the back, but
Question up the
maybe
back there.
while that's happening, I might just throw to Lindsay just a quick one, because you've got a unique African sort of view on the world here with nutrition, with you know, I think was it something like staggering 40% below 15. I mean, we've got this explosion of youth coming through. How does that affect, I suppose, the nutrition side, and is it an opportunity for Australia and New Zealand?
One of my directors has a ag consultancy group in Western Australia, and I think he consults to about 15% of the wheat belt, and he has 13,000 hectares of broadacre dryland wheat himself with a little bit of soy. He came over with me a couple of weeks ago, and he's come back and he's muscling up people and saying, you know, they get a metre of rain over here, the land is half empty. The obvious solution is they import half their food, so they need to produce twice as much. But the food, if you want to improve their nutrition mix and their health, you know, then you've got to get more protein into the mix, and then you've probably got to produce 3 times as much to be able to bring protein in. And the food aggregator that we're talking about, one of their, you know, they want to, first thing they want to attack is soy and perhaps some of the other meals, and crush and make oil, and that's 100% import substitution. But the byproduct of that is they want to make poultry feed, because they still import 1/3 of their eggs, and almost all of their poultry meat is imported. And that was partly because of the oil boom and the strong currency. You know, I had friends that they had a subsidised egg farm that the government had sort of paid for them to build. They could not put their old layers in a supermarket shelf cheaper than they could come from Lebanon or Brazil. And when your currency goes from 80 kwanza to the dollar to 540 kwanza to the dollar, then all of those rules change. But yeah, population was 43% under the age of 15. It's massive, and the whole of Central Africa is like that. And they're heading into a, you know, the governance and the strategies that, you know, they've been relative, you know, to manage your economy stably when your currency goes from 80 to 540. These guys are not doing a bad job. They actually got problems that we haven't had to deal with over the last 50, 60 years. And I think they're, you know, tracking in the right direction, but it's a big task in front of them.
All right. We had a question just to the back there.
Yeah, I've got a question on export markets. So from the perspective of the government support in recent years to try to support particularly agribusiness diversification, how would you rate that? I'm a government person, you can, you know, feel free to critique. And what else could we be doing to support that part of your sort of future growth?
Yeah, I guess from our perspective, it's really linking the understanding of what we're exporting to the understanding of what the opportunity in the market is. So there are definitely Austrade offices globally that we work really well with, because they get it and they quickly understand where to position us within that client base, and there are others just, you know, don't get it. So that information flow, that information sharing is really critical, but also understanding the competitive set too, because that may be a barrier to, you know, to one market rather than the other.
I think I've also sort of seen and when worked with Austrade and others in the wine industry for a few years and had some good support, whether it's been trade shows or market access. In places like China, it's great to see the relationship with Japan continuing to evolve, and more recently India. So that's great. I'm glad to see some of the thawing relationships with China. And I was just sort of disappointed, regardless on your view of China. We got a little bit bellicose with them for a while, and you definitely want to stand for your values, but I think you want to do that in the right way, and maybe sometimes out in the media is not the way to do that. So if I could appeal for something, how we carry out diplomacy, partly behind closed doors, is really great for businesses that are trying to export.
From my perspective, Austrade have been very good. Have introduced us to customers in South Korea, Vietnam and Malaysia. And I think it's no coincidence that India's PM was out here last week, given that they have a very ordinary winter. The cows have got lumpy skin disease. They've stopped exports of wheat, sugar, rice and cotton. And for the first time, they're importing milk or milk products. So they will be a big customer for Australian products. And the FTA will be a big push, I think.
Just putting a little, turning the question a little bit. I know it's the trade out, but in terms of Minbos, and is there any help or in terms of what you're doing, or I know you're facing out into Angola, but
yes, we get a lot of help from DFAT, not necessarily from the trade side. So we found our heads of mission in, the High Commissioner to South Africa is the ambassador to Angola, and we held a colloquium up there to, present our project to the ministries of agriculture and other relevant ministries. And our ambassador, partly to escape South Africa in the middle of COVID and get out, but our ambassador came up and helped with that. From a trade point of view, we really don't fit. We're not exporting either technology or products to the country. So they try hard. They put on a booth at the premier mining conference in Africa every year, which we're afforded and they access to, and they introduce us to ministers and collective, and that puts Australia well on the map in that sector. But it's difficult. I think there's 200. I think there's 600 or 700 small mining companies in Perth, 200 of which have their primary asset in Africa. And most of that is in Southern Africa. So there's a role there for DFAT, but it's, in terms of pushing much at government level, it's figurehead more than reality. Yeah.
Okay. One little thing I'd add for the government, if they're here, and it's probably less about DFAT and other areas, is there's two things I'd love to see the government do. We're starting to open up immigration. We've had critical skill shortages in areas like IT and labor, and so it's been great to see some progress there. If they could just sort out the housing policy, then we'd have somewhere for them to live. That would be really great. And this energy transition, it's been bumpy so far. And I think how you go through that energy transition so that companies like Paul's and ours that are energy users, we're going to do our bit on sustainability, but trying to have a real plan there that kind of gives some stability to energy prices, that would be great. And I feel we're not as good at that as we could be. So housing and energy can really help businesses, not just that are exporting, but any businesses.
Okay. We might just look for. I believe it's afternoon tea, so we don't want to get in the way of that too much. I'd like to thank the guests today for a fascinating update, growth, energy, all sorts of things happening across all four of the panelists today. Good luck with the development of your businesses into the future, and we hope to have you all back next year. Thank you.